All right, everyone, welcome to another episode of the show. Today, we are honored to have Marc Chenn, who was the co-founder and chairman and CEO of SaltStack, a leading provider of cloud and security automation solutions. In 2020, Marc led SaltStack through a successful acquisition by VMware. Marc was recognized as a top entrepreneur in the state of Utah and was named a Peak 100 winner by Utah Venture Entrepreneur Forum. Prior to SaltStack, Marc worked with FinTech SaaS provider Compliance 11, and prior to that, Marc enjoyed a career in finance with Morgan Stanley in their investment management division. Marc currently serves on the board of Silicon Slopes and is passionate about sharing his journey as an entrepreneur, as well as a board member and advisor to various companies. Marc graduated with an MBA and undergraduate from BYU, where he was also an All-American high jumper, which is an interesting anecdote. So welcome in, Marc. Really excited to have you.
Thanks so much, Chase. Appreciate it.
Yeah, thanks for taking the time. Well, we'll jump into a bunch of stuff today, but the first thing I typically ask my guests, just to get some context and understand who you are a little bit more, is to talk about your upbringing and specifically what should listeners know about your upbringing to understand who you are today.
Yeah, I mean, I had a great upbringing. Really grateful for my parents and my siblings. I was born and raised in Spokane, Washington. And we were kind of a, lower middle class family. Had parents that worked really, really hard. My mom was an educator and my dad was in business. And the interesting thing I think about my family that I really take from that experience is that, I was raised with an awareness of where our family came from. My dad immigrated to the U.S. Both my parents were immigrants. Dad came from Taiwan and my mom came from Canada. Met in Palo Alto, and they started the family years later. But I'm obviously half Chinese, and so I was very aware of that immigration story, learning what that was like for them to come to the U.S. Start from scratch again, restaurant, photo lab, the whole bit there, what it was like to kind of just work hard, pull yourself up, and build anew. And so that, I think, really, that whole family journey, that life story, at least on the Chenn side, is something that really, I think, was formative for me as I thought about that. But, I was a kid that loved to compete when I was young. We were always coming up with, neighborhood games and competitions, whether it was capture the flag or, a mini Olympics or just riding our bikes around the block to see who could get around fastest. And I just loved competition, and that stayed with me through my athletics as well. And throughout my business career. But so there's a lot of things that I think are pretty fun and pretty formative about those years.
Yeah, I think that's a trend that I've seen in a lot of entrepreneurs, is that competitive drive and kind of just having that innate piece of you. So from your earlier days, shifting into college, I think a lot of people have different mentalities when they go into upper education or into their undergrad. It sounds like you had a background with your parents' experience that you had that drive initially. Did you go into school at BYU wanting to be an entrepreneur, or did you have a goal to go just get a good degree, get a job and figure it out from there? What was your mentality coming into BYU in your undergrad?
I mean, one of the defining experiences for me growing up was at age 15, we moved from the state of Washington to Hong Kong. My dad had always wanted to live and work as a family in Asia. And so we ended up moving when I was 15. And, at the outset of that experience, it was very, you get uprooted as a 15-year-old and you're leaving all the things that you love as a teenager behind. But what I didn't realize in that moment was that I was going to gain a whole new worldview from that experience that turned into an amazing, amazing experience and very shaping experience for me. I was able to meet really amazing individuals. I don't use that word lightly. They were individuals that were at the top of their game in business. I met individuals that I thought were people of great faith religiously when I was there. And I was exposed to a whole new set of friends, from all around the world. And so that shaped me. And to answer your question, when I went into BYU, at least 50% of my thought process was that I wanted to play college athletics. And I was excited about doing that because sports had played such a big role in my life, my early life. And I didn't want to give that up yet. And then these seeds had been planted through these interactions that I was having with these business professionals and these government leaders and just these religious leaders in Hong Kong that really shaped my sense of self and what I thought I could become, or at least what I wanted to become, and how I started to think about, the next X number of years of my life. And so I didn't really know what I wanted to study, and I didn't really know what the future was going to hold, but I just was excited to get there because that campus was just so full of life and energy and seeming opportunity. And my parents were always teaching us to just seek out the best opportunities that you possibly could seek out. And I really am grateful for the experiences at BYU. Yeah,
that's amazing. And you mentioned earlier on that you were an All-American high jumper. How did the dynamic of competing at that level while attending school kind of play into your mentality and how you approached education?
I mean, I was a walk-on. I wasn't extremely assertive. It's kind of a funny thing to think about. I loved sports, and sports is about competition and driving to achieve your goals. But I didn't really know at age 18 how to navigate my way into a D1 position on a team. My dad had actually played college basketball, and cool. But he was kind of a walk-on, and I was a walk-on as well. And so, we were just kind of making things up as we went. But fortunately, I had a mom that was pretty proactive, and she had contacted a bunch of coaches from Hong Kong. Wasn't a lot of recruitment going on in the 90s. I was able to then just secure a spot, was given an opportunity really. And from there, it was all about drive, determination, and trying to impress and perform at a level that would justify a position on the team. And for me, honestly, I feel like that has been a defining theme of my life. Is I haven't always known how to do things or how to, wasn't necessarily blessed with this innate sense of how to navigate every new situation. But there's always been a desire to achieve, a desire to work hard to achieve those things, whatever those things might have been. And I think there's something about that when we work hard, when we have a vision and at least aspiration to do good or great things, that somehow there's a tailwind that helps to propel us forward.
Yeah, I agree. Well, I'm sure there was a ton of overlap in terms of the mentality and competitiveness you mentioned earlier. So, what did you end up deciding to study, and how did you decide on that major?
Yeah, so I studied international relations through the Kennedy Center, which at that time it was a confluence of political science, economics, and some business coursework as well. And it was a great major. Coming from Hong Kong, my eyes were open to the world. I loved to travel, appreciated different cultures. And, I think that when you're able, at least in your undergraduate years, some people will study something that's very technical and that's going to allow them to graduate and to move on and move into a field where they can contribute right from the very beginning. For me, I had these thoughts and these ideas ruminating in my head about a graduate degree, getting an MBA. My dad had an MBA, and so I was just kind of following that path. It seemed to work for him, and so that's what I studied, and I ended up really enjoying the major there in the program. It's been a great blessing. So
that's great. Yeah. Did you have any time between your undergrad and you getting your MBA, or did you go work, or was it?
I did. Yeah. My first job right out of school was, I worked in the consumer food industry for 1 year. I was still pursuing this Olympic dream. I wanted to, I wanted to make an Olympic team. I graduated in 2000 from BYU. 2001. And so the year before we graduated, I was married at the time, and my wife, we're still married. My wife and I were pursuing this dream together. Received an invitation from USA Track and Field, as a top 10 ranked high jumper in the nation, to train at one of the Olympic training centers.
Wow.
And we were in a life position where my wife was, we were expecting our first child, just graduating or preparing for graduation, and just signed a professional contract with Reebok, and this,
Nice.
kind of, they're a lesser known brand, but at the time, they had a program, and they allowed me to kind of train and work at the same time. And General Mills was a company with, the Wheaties box that was willing to give me a position in Colorado Springs, and I was able to train and work, and I actually coached at the Air Force Academy at the same time. It was a really cool experience.
Yeah, that's great. So what ended up happening there with the Olympics?
So 2000, the summer of 2000, I was able to compete at the U.S. Olympic trials in Sacramento. To make an Olympic team, you've got to be top 3, and they'll take a 4th as an alternate. I went and ranked, I think, 10th, and I think I placed 9th.
Got it.
That year.
Yeah.
So it was great.
Yeah, great experience. It's awesome.
Yeah.
It's very cool. So from General Mills, and I looked into some of your early background, Marc. I saw Altruis, some time at Sorensen, and then I mentioned Compliance 11. But yeah, maybe take us through those first, few years of your career and any experiences that you had that would be formative for you.
Sure. When I think about the beginning of my career, there's always this question about should you go into a large organization that's well formed and kind of a well-oiled machine, or do you go into something that's a little bit more entrepreneurial? And that's a big question, I think, especially today, perhaps even more so today for a lot of people. If you go big, it's a little more institutional, right? The pie's baked, the processes are defined, and maybe the scope of your responsibilities is a lot more kind of tapered down, more narrow. And, I figured that there was always going to be a time for me to pursue. I wasn't yet convinced that I was an entrepreneur or that I was going to pursue something entrepreneurial. That came later in my career. And so I made the decision that I was going to pursue this path into a larger organization while I was pursuing other dreams and goals at the same time in parallel. And, learn what I could learn from that experience and take away what I needed to take away from that, while at the same time having this other path that I was really passionate about. And, I learned a lot. And one of the things that I think I learned was that I really thrive in environments where, A, I'm working with great people, there's a sense of camaraderie, trust and respect. B, where I have at least the perception of a sense of control over my own destiny, or at least that where I feel that my impact is felt and that I feel like I'm impacting things. And then third is just this sense of unlimited opportunity, whether that's defined as financial upside or scope of role, the variety of tasks that you could perform or jobs that you have responsibility over. And so I learned that from that experience. I took that away and realized that I wanted to do something that was a little bit more entrepreneurial, where I could spread my wings. And so that led me into a slightly different chapter, right? And it was an evolving chapter. It didn't all happen at once. It was, kind of in piecemeal, that I'd gain an experience here, gain an experience at another organization. And, eventually it worked its way. I worked my way into this position. I guess what I'm trying to communicate is that eventually I realized that after working for all of these different companies, that I really wanted to, have the opportunity to kind of lead and run something of my own.
Sure. Yeah. And I think that approach initially going to a larger company, but trying to have an entrepreneurial something on the side or something in the back of your mind where you're able to take what you learn from an institutional or larger firm and utilize that. It sounds like ultimately you want to be in some of these more entrepreneurial positions, which obviously help as well. Mm-hmm. So then, yeah, we get to the point, sounds like where SaltStack or the concept, was that the next step for you at that point after these years, or was there something prior to that?
There were a couple of steps before that. I think that it's an interesting thing to think about, like, at what point are you ready?
Sure.
And I think the answer is you're never fully ready,
right,
for entrepreneurship, because it just throws so many different curveballs at you. There's so many different variables that you've got to manage and account for as an entrepreneur that you're never going to be fully prepared or fully ready to make that leap. But if you have a conviction about something, a problem that you want to solve, or an industry that you would really like to be in, where you feel like you've got some unique, differentiated advantage, it's something to consider. But no, I took I had probably 3 different steps before that. So Altiris was my first foray into technology. And, I'm grateful that I had that opportunity. It was a company that was, post the bubble bursting in 2000. Mm-hmm. Altiris was this like young, up and coming tech startup that focused on systems management software. And it had this really great management team, a culture that was just exciting to be a part of. There was an energy that was palpable when you would walk in those doors. And I saw that as my next, formative opportunity to be in there and to be working with a great group of people. And that company, not by any surprise, was able to go public in 2002. Mm-hmm. And then it continued to grow. And then in 2007 was acquired by Symantec for a little over $1 billion. And it was one of the early and I think great tech IPOs from the state of Utah. Not the first, certainly, and certainly not the last, but at that moment, it was the first. We went public on the same day as Overstock.com.
Oh, wow, yeah.
And it was the first successful tech IPO on the NASDAQ in 18 months post-bubble bursting.
Sure.
So it was a pretty amazing run. So that was one. I went back to graduate school after that because I was working mostly in a sales function for them. And that was great because I saw exactly, that alignment between product market fit and then customer acquisition and all the steps that are required in between there. And I found myself craving more, like more knowledge, more insight, more of a skill that I think I could use to be the entrepreneur that I eventually wanted to become. And so I went to graduate school thinking that would shape and form a lot of my thinking. And it did, right? It was great, right? Business school was amazing. I was back at BYU. And this time I had a finance emphasis though. And so I started to get a little more specialized and thinking about that. And, that's when I summered at Sorensen Capital, great private equity fund, venture capital fund here in the state of Utah with some amazingly intelligent, amazingly good people.
Yep.
And they're still doing great things today. And I summered at Goldman in New York City because I was just trying to expand my boundaries a little bit more and to get that perspective and to kind of knock down some walls so that it wasn't as, I'll call it, intimidating from a professional standpoint.
Sure.
And those experiences really did, I think, serve a great purpose and shaped my professional trajectory as well. Ultimately, I think that when you're in that world, you've got to make a decision as to whether that is a stopover or whether that's your path. Mm-hmm. And, for me, I loved what I was doing when I was doing it. I was present. I was successful, but ultimately, I was looking at the kinds of clients and the kinds of companies that we were serving at the bank. And I realized that that's what I wanted. I wanted to be in that seat as opposed to, being on the other side of the table.
Yeah. Yep.
And so I started to think about how I wanted to navigate my path to a situation that would allow me to be in that seat. And, ultimately, life is funny because these relationships that you establish, they stay with you forever. And a good friend from my graduate school days gave me a call one day, and he said, "Hey, you ought to think about meeting." I just met a really bright technologist in Salt Lake City, and I know that you lived and worked, in Utah for a time. You should consider talking to this person. And so that's when I met Tom Hatch, my eventual co-founder for SaltStack. And lo and behold, that kicked off an 8-year journey where Tom and I, the two of us kind of working back to back in an office, actually first in his basement and then, our first office. We were just grinding and trying to figure out how to build this company.
I love it. And I resonate with what you said, Mark. I worked, my first gig was with JP Morgan and their private wealth group. I transitioned to their real estate group later on, but distinctly remember sitting across the desk with high net worth individuals, entrepreneurs who's had success, and having that feeling of kind of wish I was on the other side of the table, and kind of that being a catalyst to my journey. But where were you working prior to you guys kind of officially launching the SaltStack effort? Was that Compliance 11 or was that somewhere else?
Yeah. So I skipped that step, didn't I? We started, so postgraduate school, went to Morgan Stanley. So that's where I was working, investment management.
Yep.
And that's where I made the decision that I was going to take what I'd learned and move on to do something more entrepreneurial. And that's when the introduction to Compliance 11 happened. And I was able to, Compliance 11 was very timely. It was a financial services technology that focused on providing a compliance framework for hedge funds. And of course, in 2008 and 9, as the economy was really just going through the beginning of that great financial crisis, you also had, in parallel to that, a number of really spectacular hedge funds that were blowing up, either due to corruption, non-compliance, or just, falling victim to the markets.
Yep.
And we had created this, kind of first of its kind SaaS platform that hedge fund compliance officers could use, install it, and then they could start to monitor all of the trading activities of their employees to ensure that they were doing this trust and verification of their personal trading activities. And it was just timely because, regulation was being passed at the time that required them to have some framework in place. And we had, we landed in a great seat to be able to make that happen. And so we grew that company, and we grew quickly for 2 years. We went from, a little under 40 customers at the time to over 500 customers. And then we were acquired by Charles Schwab in 2009.
Yeah, I remember reading that.
Yeah.
Okay.
And so that acquisition took place, and that's what I was doing immediately before
was
starting
that
SaltStack.
acquisition kind of the catalyst of, okay, we've wrapped things up here, what's the next thing?
It was.
Okay.
Yeah. As is usual, there's a window of time if you're an executive in a company where you have a transition window.
Yeah.
And those transition windows, I think, are helpful for the acquirer so that they can, ensure that things run smoothly post-acquisition. Mm-hmm. And I think that it also gives you as an executive an opportunity to really kind of think and reassess, after your commitments are fulfilled, what you're going to do.
Yeah.
And for me, I knew that that was just the beginning of the journey.
Yeah.
And that, on the heels of Altiris and on the heels of Compliance 11, that I only wanted to do it more.
Right. Was there and I asked this because I'm curious about funding for SaltStack, was there like a liquidity event associated with the exit with Charles Schwab that allowed you to roll into SaltStack, or did you guys end up raising capital from outside sources? Were you able to self-fund? I guess, how did you guys get yourself off the ground?
Yeah, it was really a combination.
Yeah.
our acquisition was helpful, right? I think for me, you've got a full spectrum of entrepreneurs in terms of their risk taking, and we had, our personal situation was that, our family was young. We had 3 kids. We were living in Manhattan, and, in Manhattan, it's one of those cities that a lot of people are just kind of living, they're subsisting.
Right.
It's an expensive town. And, that's why I guess that's why Sinatra, created that song. If you can make it in Manhattan, you can make it anywhere. Right.
That's right.
But, so the exit did provide some liquidity for us to be able to fund SaltStack, for a time. And, but we knew that this kind of a business was going to be, I call them thirsty businesses, right? They need capital, right? For you to grow fast enough. And so we eventually did raise a seed round and then an A round.
Got it. And about how old were you at the time, Mark, when you guys started SaltStack?
I was 32.
32. Okay.
It was my early 30s.
I always like to get the context because everyone has a different journey. I mean, we've had folks in here who started businesses at 50 and at 20. And so it's always interesting. Okay. So you have a bit of liquidity from your sale of the prior company. You decide to start this company. Yeah. Talk us through the first, year or two. And I guess before that, I'm curious, what was the problem that SaltStack was solving, for those who aren't as familiar with, SaaS or the technology space, would be great to understand that.
Yeah. SaltStack was an automation and security platform for IT professionals. When you think about the companies of the world and you think about, many of these companies are, participants in this digital landscape. They have a website, they have a digital footprint, and to run their digital infrastructure, all those servers, right, whether they're in the cloud or whether they're running on premise, they oftentimes have more than one server, right? And in many instances, they have upwards of tens of thousands or millions of servers, depending on the scope and scale of these companies. And the technology we created was oriented around automating the redundant IT tasks that an IT professional would need to perform. So you think about the initial configuration and setup of a server wherever it exists. You think about the updates and just the workflow that an IT professional needs to follow. And then when you think about security, which is a huge risk, there's a lot that goes into the security industry, but we were primarily focused on helping organizations take an assessment of their IT footprint, identify vulnerabilities, and then to remediate those vulnerabilities using our automation. Makes sense. So that's what we did.
Yeah, makes sense.
It was back office, it was developer oriented, and but it was valuable.
Yeah. So it's you and your co-founder for the first bit. What was that the seed capital you raised, Series A and B? What did you utilize those funds for? Was it hiring additional developers? Was it expanding payroll and employee count? Maybe walk us through some of the use of those funds. It'd be interesting to hear.
Yeah. The beginning stages of our business, we're just getting things off the ground. And so, we focused on developer talent at the outset. I received some really good counsel from one of our first investors who, had been through a number of exits prior. And he said, focus on getting your product right. And I didn't fully appreciate what he meant. I knew what he was saying, but I didn't fully appreciate what that entailed. And I've since learned the importance of really identifying problem solution, knowing kind of the space that you're in and understanding and appreciating what the customer wants to get out of your solution and how you can deliver value to them. And so problem solution is a huge piece, and figuring out ways that you can generate or create a product that's going to provide alignment between the problem and the, and what you deliver. So product market fit. And so we used capital so that we could develop our solution more fully. We also had an open source community, right? We had one of the world's fastest growing open source communities at its time, at that time, where we had tens of millions of downloads on a monthly basis that were just happening because people caught word of this community that had been built and this product that was providing value. And we were able to, nurture that community with some of those funds as well.
Yeah, that's great. And in terms of raising capital, there's a variety of structures that you can utilize. But when you were looking at capital, were you raising from high net worth individuals? Was it family offices, or was it VC firms that were coming in and more of a typical tech investment?
Yeah, I'd say we took a slightly different path at the beginning. I mean, maybe it's not too dissimilar now, but we made an intentional decision, in spite of the immense VC interest that we had in our early days, that we wanted to be focused on really making sure that we had alignment around product market fit and that we understood the value of our community. And so we felt that we could best do that with the help of some seed and angel investors. So we had 3 distinct investors that came in who were just betting on us as people and were letting us, they gave us the freedom and the flexibility to build, the early foundational pieces of the company. We felt that if we raised in that manner and built the kind of value that we needed to build over time, that the VC interest would continue to be there when we went out to raise a Series A.
Yeah, makes sense.
We actually went through a few rounds of seed and seed plus funding, probably had a higher than normal amount of capital raised through those 2 rounds before we actually went out and raised our Series A.
Yeah. And when it comes to getting to the VC firms and the structures, I'm not as familiar, but do you have any advice to budding tech entrepreneurs when it comes time to raise money? How much you should give up, what the terms might look like? I mean, what that negotiation should feel like?
When it's a great question, because I think it's all over the board.
Yeah.
And there are so many different variables and factors at play when someone goes out to raise capital. I mean, it's not as simple as just going out and saying, "Hey, we're raising capital. Everybody line up and write your term sheets." You've got market forces that you've got to look at. You've got competitive dynamics at play. You've got funds that are, perhaps specialized in certain areas or verticals of the market that can play a role. And so I think, generally speaking, I would say when you're trying to align capital to your company, that you want to do so thoughtfully, and you want to find the right partnerships. You want to find the right people. Even if they're a great fund with a great reputation, think about who the lead investor or who the board member eventually is going to be, and make sure you've got a good relationship of trust. Capital can come in from all different, sources. And so just be thoughtful about, I think, building a really long-term relationship, because it ends up being, a long-term endeavor.
Yeah, absolutely. That's great advice, Mark. Yeah. So your growth then from kind of the seed round, Series A, B, I think it was 2020, right? When you guys sold, and started about 2012, 2013. Was that?
Yeah. 2011 is when the open source community started.
Okay.
And then we incorporated in 2012.
Okay.
And then continue to build, through the exit.
So what were those years like, maybe 4 or 5 years leading up to the exit?
It took us a few years to really kind of find our footing. We had this massive adoption in the open source community that I mentioned, and that was so cool. I don't think I've ever been a part of something that viral and that exciting. I mean, obviously it had its place in the tech ecosystem there. It was with the developer audience, as opposed to kind of front end consumery types of customers there. But first few years, and we were just kind of figuring out how to maintain an open source community, and at the same time, how do we monetize this free platform? People could download it for free. They could contribute to it. They could use it for really any purpose that they wanted. And so how in the world were we going to generate cash from that. And we learned quite a few lessons about how to monetize open source. It was my first open source company, and so I really was walking into a new experience again. But the realization was that we had to create value, right? Anytime you take capital, there's an expectation of return, and I certainly took that seriously. I wanted to make sure that we were generating returns for our investors. And so, the 4 years leading up to the exit, we were just getting into our stride. I mean, we went from kind of bouncing around trying to figure out different strategies of monetization to a position where we developed finally an enterprise version of our product that we could take to the commercial markets. We were selling larger deals to, Fortune 2000 companies, and they were deriving real value from our solutions. And so it was an exciting time. We had introduced our security product, and that security product really became, kind of a new and exciting product that the customers were eager to get their hands on. And so there was a lot happening those 4 years leading up to the acquisition that I think really became the defining reason why the acquisition took place.
Yeah.
And they were all good things. And so, you tune your process, you get your KPIs, you start to really kind of tune your business in a way so that you can start to scale at a more rapid pace.
Yeah. And if you can share what you can share, Marc, but for VMware coming in to acquire you guys, what were the things that I guess, what do you think got them excited? How many employees did you have? Were you guys profitable at that time? What was kind of attractive, do you think, about SaltStack that they wanted to acquire you that time?
So we were acquired by the cloud management business unit within VMware. I mean, it's a big organization, multi-billion-dollar, publicly traded entity. At the time, they've since been acquired by Broadcom.
Sure.
But at the time, they were a multi-billion-dollar market cap company, and they focused on the developer experience as well. And the cloud management business unit was thinking about automation. And they saw how our technology could slot in to their platform and become extremely valuable instead of just, relying on third-party vendors to perform these automation tasks, and leaving it to an ecosystem where, they could use one of our competitors or they could use one of ours. I think they started to really think about customer experience and how disruptive it was for them to tell their customers, hey, use our holistic automation platform, but for this one piece, go to a third party and then come back to use our solution. And so it made perfect sense to us why they needed our technology and why it was a fit. And, for them, it was a matter of going out to the market, identifying the players in the ecosystem, and then figuring out which of the vendors, aligned best. And fortunately for us, it all worked out.
Yeah.
So
were you, prior to them getting involved, I guess, had you guys contemplated a sale? Did you do a road show, hire an investment banker, or did they come kind of unsolicited, like, hey, we want to buy your company?
We were actually in the process of raising a Series B round.
Okay.
And I think that, just to preface what I'm about to say, I think as you're building a business that you need to plan for the eventuality of an exit, whether that's an IPO, whether that's an acquisition. And so part of my role as CEO in the business was to be thoughtful about building up an ecosystem of partnerships that, could eventually become our potential acquirer or partner. And so we were in this process of going down the path of raising a Series B. And we knew that there was interest there in the market because before 2019, when we started that process, we had been approached several times by various companies. And so we knew from those early indications and even some offers that had come in that we were going to have a good shot at an acquisition at some point down the future. And so that was comforting because as an entrepreneur, like sometimes you're just building and you're growing and you just don't know what the future holds. And it was reassuring for me as a first-time CEO and founder to feel like, okay, we really have something that's of value here, as evidenced by, the interest that was coming inbound. And so, anyway, as we continue to build, through the Series B fundraise, there was a moment at which we received an inbound offer. Word got out, and that inbound offer turned into, then we hired a firm to help us, and that turned into, half dozen offers on the business, which was a great position to be in at that point in time, because then you can start to be a little bit more selective and thoughtful about how to kind of taper that down to the eventual acquirer.
Yeah. What were your emotions like? I'm curious, during that sale process and then at closing.
Yeah.
I assume there was some liquidity event for you, but after working for 9-10 years on something that you put, blood, sweat, and tears in, how did that feel?
I think an acquisition is an amazing event. When you think about the odds of actually winning and going from like 0 to 1 and then from 1 to an exit, unfortunately, those numbers are very, very small. And so I think I'm filled with a sense of gratitude that we were able to build and to create and then eventually realize the harvest at the end, because I realized that it's a set of experiences that not very many people have the opportunity to go through from start to finish. There's a lot of emotion at an exit, and 8 years, by the way, is a really long time in tech. You look at Qualtrics, for example, and I don't remember how long, but it was over a decade that they were building their business. And, Pluralsight and other businesses here locally that have had really nice exits, they took a while to build as well. And so there's a lot of emotion because, this is your baby, right? This is your life. It occupies so much of your headspace and your thought process for that much time that it can be kind of a bittersweet moment, when you eventually do it. But we knew without a doubt that it was the right time for us to make that exit happen, for a variety of reasons. And, I think that there was just an overwhelming sense of gratitude when we were able to get to the other side of that line, and a sense of relief and a sense of joy, and, but it was fun.
Yeah.
We're grateful for it.
That's amazing. Well, I'd say from a timing standpoint, given what's occurred the last 3 or 4 years, it's probably really optimal time to exit 2020 relative to now. I know there's a lot of valuation, discrepancies, and then raising capital is really hard in tech. So good for you guys, and congratulations on that.
Thank you.
It's awesome.
Yeah, we feel lucky.
Yeah, it's awesome. So you mentioned before we started recording, Marc, your involvement in a couple other ventures post exit with SaltStack. Maybe you could talk a little bit about what you're up to today.
Yeah. I feel fortunate that I've been able to meet a lot of great people throughout my life, in both kind of personal and professional settings. And that those relationships have played a big role in my career. One of the early relationships that I established was with Dr. Clayton Christensen from the Harvard Business School. We met actually before I started SaltStack in New York City in a different setting. And he was just such a generous, such a magnanimous person to me in offering up some time and some help in the future. And I think that if you talk to anybody about Dr. Christensen, Clay, that he was that way for so many people. He became my first board advisor. And the reason I'm sharing this experience is because after my year commitment, the transition with VMware, I was brought in as a venture partner to his fund, working with his team. He passed a few years back, and was given an opportunity to work as a venture partner in one of their portfolio companies, first as a board member and then as the president of one of their portfolio companies. And that experience, post-exit, post-close, was awesome because I was able to sit in a position of experience and provide some mentorship, perspective, and even support, right? Living in a place where you have some empathy for the entrepreneur, you know what they're going through, you kind of can see what they're feeling, was an awesome experience. And so I did that. I've been doing that for quite some time. I've been investing, in various, ventures and opportunities. And that's been enjoyable as well. And about 6 months ago, I created an investment vehicle that we're calling Promontory Capital Partners. The name behind that is interesting. When I was in 8th grade, I wrote this paper as a Chinese American about the exceptionalism of Chinese Americans in our country. And in particular, it was about the railway that was developed across the US that obviously merged at Promontory Point with the Golden Spike here in Utah. And so it has some significance for me when I named that firm. But so Promontory Capital Partners is the, kind of investment vehicle that we're working through right now.
That's exciting.
Yeah.
And do you have a certain focus for that vehicle? Real estate, tech, VC? I mean, where do I assume maybe tech, but
yeah, we're at this point an open mandate.
Okay.
We invest through SPVs as opposed to it being a closed-end fund at this point, just to provide some flexibility. My feeling is that I'll likely be starting something again soon. At least that's my hope.
Mm-hmm.
I feel that, going through the cycle once before on my own and a couple of times before has just, you're kind of smitten forever. But I think in terms of our investment mandate, we're opportunistic and we're looking for just the best kinds of deals that we can find at this point. Tech obviously has a special place in our hearts, but we'll look at all deals.
Yeah, that's exciting. Well, it's great. To kind of wrap things up, and actually before we do that, just really quickly, you mentioned you were a board advisor with Clayton Christensen. We've thought about that with our company. I know a lot of newer companies think about forming a board of advisors in some capacity, rather than more of a formal, board of directors. And I guess, what advice would you give to companies contemplating forming a board of advisors? How many people would you recommend? How do you compensate? How do you like to be compensated as a board of advisor, a member of a board of advisor? Any insights on that would be very interesting.
Yeah, I think that it really just depends on the stage of the company. I think that one lesson is that governance is helpful. It's important, even necessary in a company, because it gives you a framework of accountability and it gives you an opportunity to really be thoughtful about, meeting with individuals that come from different backgrounds, experience set, and merging all of that collectively to help that business entity kind of grow and become what it's supposed to become. No one individual has all the right answers all the time. And so extra eyes, especially from trusted sources, is, I think, so essential to your success. In terms of how to do that, how to structure that, I think, in the early days, I think a advisory board is a great way to start, right? There's benefit that can be derived from that. I think that once you formally take capital, that having a board structure that allows you to operate freely with accountability. I know that sounds like I'm speaking out of both sides of my mouth there, is important, but supportive, trustworthy, experienced board members that have value to add. Right?
Yeah.
I think that a lot of times I see boards formed that, either it's like a loosely cobbled cluster of friends.
Yep. And
other times it's just people are filling seats because they know the formality needs to be followed through with. And so I would find a group of individuals that are diverse enough in their thinking and their experience that they can add value, but that you know them well enough that there's a relationship of trust. Again, it goes back to that first rule of business: trust and like the people you're working with.
Yeah.
And I think that rule spans even to the board level.
That's great advice. And in terms of compensation, if it's a newly formed company who doesn't have a lot of capital, I guess, to go around in terms of a salary or stipend to an advisor, do you recommend stock options or one-off interest in SPV vehicles or promoted interest sharing or other?
Any and all of the above. I think it's going to come down to what aligns best for both teams' interests or both individuals' interests. But I do think that some form of compensation is helpful because people are going to focus where, they know that they're being compensated.
Right. Yeah, I love that. Well, wrapping up with the last couple of questions here, Marc. Going back, if you could go back, to your 20-year-old self, is there any advice or things you change, something that guidance that you'd give yourself that you can share in the entrepreneurial space or just in general?
Boy, that's such a good question. I've had this thought recently about, just investing. And Clayton Christensen wrote a book that has been very impactful in my life, and it's called How Will You Measure Your Life? And in chapter 5 of that book, he talks a lot about investing, and not just investing financially, but investing into your personal life. And I think that in your early 20s, you've got energy, a propensity to take risk, and a lot of naivete as well. And I think that if your vision of what you want to become, it's like fast forward 20 years in your 40s or even 30 years into your 50s. If you don't have a clear sense of what you want your life to look like at that age, I think you should slow down, do a reset, formulate a very clear vision of what you want that to look like, and then reapproach those goals with that vision in mind. And so I think if I were to look back at my 20-year-old self, I would probably do a rewind, not because I have this awful life, but just because I think that life started to become, it picks up, it moves on you, and you have there's the tendency to be a little bit more reactionary as opposed to be on the front of your foot. Yeah,
that's such great advice, Marc. And money is typically a part of the vision, I think, for a lot of aspiring entrepreneurs. Mm-hmm. And I sometimes I like to ask this question, but how does money play a role in your life now that you've had success and exit? Has your mindset shifted at all now that you kind of have that position? I guess, how do you think about money in your life now?
This is a really good question because I think that everybody has a different relationship with money. It's funny to think about your quote unquote relationship with money. But some people grow up in poverty. Other people grow up, with relative amounts of abundance in their lives. And that shapes the way that you think about money. I think for me, I grew up very conscientious about money. And it wasn't because we had a lot of it. It was because, I remember moments there thinking, are we going to make it? If your parents come in and say, hey, we're going to pinch our belts this month. We're going to be a little more frugal, eat some, we're going to be eating out of our food storage or whatever this month. That shapes your view of money, right? Whether there's abundance or whether there's scarcity. And I think that in my early years, I had confidence that I would be able to generate money, but there was sort of an fear. And I use that word because that's the right word to use. There was a fear of not having enough. And of course, like many families, right? I was one of the older kids, we had 6 kids in our family. The life that I knew as one of the older kids in our family was a lot different than the life that my younger siblings probably experienced. And so in the early years of building a company, fear can be a huge motivator, right? Passion and fear coupled together. And I found that I was able to do my best work once the financial stress started to lighten. And you can't always predict when that's going to happen. But what I would say is, life's about a lot more than just money. And, I want to, and I think that it's a good thing to adopt a mindset that, being a generous person when times are lean and when times are more abundant is a healthy way to think about your relationship with money.
Yeah, I love that. It's so important. It's really tough to feel like you can pour out of your cup when you don't have sufficient in your, in your own, pour into another when you don't have it in your own, but having that mentality to do so to the extent you can, even when you don't have abundance is really important. So that's great advice, Marc. Last question, we'll wrap up. And this is something I ask pretty much all of my guests, is to talk about success and how you define it holistically in your life. You mentioned how will you measure your life?
Yeah.
I guess, how do you define a life well lived?
I think that's it. I think that's right at the core for me. It's faith, family, and my friends, making sure that my relationships are intact. I have thought quite a bit in recent years about vision. Like, what do I want to be known for? What kind of a life do I want for not just me, but for the generations that come? I think that having a clear sense of vision and purpose is really, really important. And so for me, understanding who I am as a person, my belief in God plays a huge role in that. It defines who I am, and I think it defines the way that I choose to interact with people, or the way that I hope that I'm interacting with people. It makes me, I think, a person that wants to have harmony in life, somebody that wants to have, one thing that I've really learned and appreciated since, when you're in the middle of building a company or something, anytime you're building something, the tendency is to get just hyper-focused on that one thing. And what I have learned is that I am at my best when I'm able to kind of step back from the hyper-focus, and I'm able to think about other people's needs beyond my own. And so that role of serving, thinking, and just trying to bless people's lives becomes a really important hallmark for me. And I think will continue to be an important hallmark for me in the next, X number of years of my life. And that's what I hope I can achieve, and that's how I would define a life well lived, is my ability to kind of give back and to serve, and, even if I'm in a work capacity.
Yeah, no better way to end, Marc. That's amazing. I've truly enjoyed this episode, getting to know you and hearing your story and the insights you shared.
So thank you.
Thank you again for your time.
You bet. Appreciate your time.